各位长官、各位嘉宾，大家下午好。今天因为这个 presentation 的关系，可能我会 consistency 的关系，我会用英文 present。但是大家要是今天的下午还是 panel 的 session 有任何问题的话，欢迎用中文的发问。So thank you very much for joining for this session this afternoon about ESG. So my name is Wing. As mentioned, I oversee the manager research team across EMEA and Asia. And our main role is really to go around seeing fund managers, look at how they invest, and then come up with a rating that help investors pick better funds, right? So when we go about seeing fund managers, certainly a key theme that we've observed is they've increasingly incorporated ESG into their investment processes. And also in terms of from an investment demand perspective, and particularly in European and US markets, and increasingly so in Asian markets as well, investors themselves, investors who invest in funds, are placing a greater focus on the ESG factor as well. So what I thought about doing today is really to share somewhat our observation in the marketplace. What is Morningstar doing in a sustainability standpoint, and how do we sort of go about sort of tackling the challenges and opportunities within the ESG arena. So as I mentioned, Morningstar started its root as a company about mutual funds. Some of you might know about a star rating. So if you look around a lot of the fund documentations, you see the star ratings. So these are the star ratings in the middle. These are basically a quant type rating to look at the risk-adjusted return of a fund relative to its categories or the same type of funds over a period of time. So it measures category relative performance, so it is historical, backward-looking in nature. And then, so that's certainly been something that's quite well-known in the marketplace. And in more recent years, me and my team, my colleagues globally, 120 of us actually globally, have been engaged in what we call coming up with the Morningstar analyst rating. So these are more fundamental, forward-looking base rating that we put together with the view to identify funds that can outperform either its category average or peers over time. So these are forward-looking fundamental-based ratings, and you can see them in the gold, silver, bronze rating. A little bit like the Olympics, the gold, silver, bronze are the funds that we like, the funds that we think they're going to outperform. And then we've also got neutral and negative rated funds as well. So these are really ratings that we've developed over the years to help investors identify funds that would outperform, or whether they've historically outperformed or not. What we've seen in more recent years is, investors are increasingly focused on the outcome of the investment. So they're moving beyond just, finding an outperforming fund, finding a fund that deliver good risk-adjusted returns, so beyond just that two-dimension of risk and return, but also moving into sort of outcome and, sustainability, certainly something that they are looking at in more recent years. So in 2016, we launched a new set of rating that is really designed to complement our existing rating range in identifying the sustainability of funds. So in a little bit like the star rating, we introduced the globe ratings. So you can see here everything going from 1 globe to 5 globe. So what it really does is, for instance, we have a Taiwan equity category. The fund that score best from an ESG standpoint get 5 globes, and the fund that score poorest get 1 scope, 1 globe. And I'm going to talk a little bit more about how we go about coming up with those globe ratings in today's presentation. So before we go into the methodology part of it, one thing I thought is worth sharing is, the demand from investors, right? So, even though we're looking at the asset management industry, we provide ratings on mutual funds. Ultimately, the investors' demand matter because that would drive the demand for the mutual funds. And then the fund managers will sort of go look out for ESG compliant type companies. So you can see here the blue bars, particularly the dark blue bars, suggest the demand over the years in Europe, and also the lighter blue bar signal the demand coming from the US. So certainly increasing investor demand, particularly from the institutional space, looking at ESG type investments. And even though this is a little bit slightly dated chart, only going to 2016, And the demand seems to be fairly small in Asia. But I think in more recent years, particularly in the last couple of years, when we start talking to clients, there's been increasingly more inquiries about ESG, not just within the institutional space, but also increasingly so within the wealth management space as well. If I go to meet a private bank in Singapore, we go talk to the fund selection team. They'll think about, is ESG going to be efficacious when it comes to helping them pick a better fund, a fund that's going to help them outperform in the future as well. So certainly the debate's coming through. And I'd probably just share one more example, perhaps. Over the past year, I've been also spent a bit of time in Europe as well. When I go see a client in Netherlands, for instance, when we present how we go about picking funds, a very common question that I get is, how do you incorporate ESG into your fund selection process? How do you go about ensuring the funds that you pick compliant with ESG? And if we say we do not take that into consideration at all, that would be seen as pretty old-fashioned, right? So I think it's certainly something that's really catching up on a key theme that we're observing around the world. So just a bit of a recap on what the Globe rating is about. I mentioned it a little bit in terms of how the Globe rating works. So it's really, the 5 Globe means that they represent funds that score really well from a sustainability standpoint. And importantly, these are category relative, right? So when we go about assigning this Globe rating, we are not assigning the rating, comparing, let's say, a Taiwan equity fund with a European equity fund. Based on our analysis and our global footprint, we understand, for instance, the ESG standard in Europe, for instance, are typically a little bit higher than they are in Asia or even Taiwan. So it would not be fair to put a European equity fund that invests in European companies with a Taiwan equity fund that primarily invests in Taiwanese equity together in the same peer group. So these are peer relative rating that we assign to funds that are very much alike each other. And we utilize our database, our understanding of the portfolio holdings to come up with these ratings as well. So from a Morningstar perspective, it's really about our understanding, our expertise, experience in mutual funds. And globally we collect, we have more than 250,000 fund investments in our database, many of which we also have portfolio holdings. So exactly, for instance, we were talking about a Taiwan equity fund. Do they hold TSMC? How much do they hold? What kind of other companies do they hold as well? That is our expertise. But what we don't have is we don't have expertise at the company level, at the ESG. And so we're partnering with a firm called Sustainalytics. Morningstar actually owned about 40% ownership of the firm. And we actually have Nick from Sustainalytics as well. We're going to talk about more the company aspect of how to evaluate ESG. I think globally they cover about 12,000 companies. And we really sort of try to leverage on expertise of Sustainalytics to come up with the portfolio level rating. So you think about, again, using a Taiwan equity fund as an example, if the fund owns 30% of TSMC and the ESG score for TSMC is X, you can very much deduce at a portfolio level what that ESG score for the portfolio is going to be, taking into consideration the other holdings in the portfolio as well. So I'm probably just going to go really brief here because I know we have another more detailed presentation around company level ESG analysis, but essentially we are taking both the company level ESG rating, so Sustainalytics put together scores across individually across environmental, social, and governance factors, so there's a score for each of those. And there's also controversy assessments as well. There's any major controversies happening in the company in the past, so that's certainly incorporated. So these two measurements are taken into consideration that are primary inputs to our sustainability rating. So how do we go about aggregating it together? As I mentioned, we collect portfolio holdings data from virtually all all mutual funds around the globe, and we need at least 67% of the portfolio holding in order for us to derive a sustainable rating. So if there's something that happens to have less than 67%, there won't be a sustainable rating. So one example would be if it's a sovereign bond fund that do not invest in credit, do not invest in equity, for instance. At this stage, there won't be sustainable rating, but it's certainly something that we're looking into as part of the enhancements. The long and short of it is we will take our portfolio holding, combine that with Sustainalytics company level research, taking the 2 portfolio scores on a some weighted basis, taking the portfolio ESG score, taking away the controversy score to come up with a sustainable rating. And these are asset weighted as well. So they represent, for instance, in my early example, if TSMC is 30% of portfolio, it will carry a higher weight in that portfolio score. So one thing we do after we aggregated those data together is to go through what we call a bit of a normalization process. Because sometimes what happens is, we look into individual industry sector. Certain type of companies typically have high ESG score. So I'll give you one example in here. A retail company, on average, tend to have higher ESG score than an oil and gas company, for example. And within the oil and gas sector as well, there tends to be wider dispersion amongst companies. So sometimes it's actually quite difficult if we just measure the absolute, we just compare the absolute. That would almost encourage fund managers or portfolio managers to invest more in retail company over oil and gas company just to get a high ESG score. So that is not our intention. We're trying to get portfolio managers to select the retail company with the better ESG score within that sector, and also the better oil and gas company within that sector as well. So what we do is we run a normalization process to ensure that we are really we're really focusing on the better companies within each of the respective sector. And then once we've done that, we would take the portfolio level ESG score minus the controversy score to come up with a Morningstar portfolio sustainability score. And that is the score that would go into the rating calculation. And then when we think about using portfolio holdings, I mentioned about we collect portfolio holdings across the board. When we first started putting together the rating back in 2016, we focused on the latest portfolio holding. But as time goes by, we were able to make further enhancement to our rating. And as of last year, we introduced a new enhancement that basically incorporate the portfolio holding over the last 12 months rather than just the latest portfolio. The reason being it would make it a more reliable and more stable measurement. And that is basically, we also believe it will better capture the manager decision-making process, and it's a more stable type measurement. And then that's sort of how we come up with the rating. So it's a sector relative measurement, as I mentioned. So we need at least 30 funds within a category to come up with a rating. And we're looking at the global category. So let's say, for instance, we're looking at a US equity fund. It doesn't really matter if the US equity fund is only available for sale in the US, in Taiwan, in Europe. As long as it's a US equity fund, it will be grouped together in one. And then we are measuring the ESG or ESG rating within that category. And the best fund get 5 globes. And you can see it's a little bit like a normal distribution. So the fund that scored the highest, the 5 globes, only 10%, make only 10% of the universe. The lowest, also 10%. And then actually 35% of the category get 3 globes. That's very much the same distribution that we also apply for those of you who are familiar with the Morningstar rating as well. So this slide summarizes the enhancement we've made. I covered a couple of these before, so we're moving from the latest portfolio holding to portfolio holding over the last 12 months to improve the stability and reliability of the rating. We also moved from Morningstar category to global category, so it doesn't really matter where the fund is domiciled, as long as they are the same type of fund, US equity or whatnot, they get grouped together within the peer group. And because of that, we're able to expand the size of the threshold as well. So we can generate a rating with at least 30 funds in the category. We're also improving the threshold, so it's now 67%, so we need to have at least 67% of the portfolio to generate a sustainability rating. And the latest enhancement also include fund-of-fund analysis as well. And this is an enhancement that we've made since October 2018, so it's a relatively new enhancement. One other thing, I talk about enhancements to our sustainability rating, and certainly, when we go about meeting companies, one other thing that asset managers tend to focus on is how to incorporate ESG into the investment process. Now, the greatest focus historically has been around governance, particularly corporate governance. And if I go around seeing asset managers these days, whether that be an emerging market equity manager, based in Hong Kong, based in London, or developed market managers, and there's certainly particular strategy to focus on particular ESG type mandate as well. They're very much inclined to incorporate ESG as part of the investment process, and G being the most focused one historically. But increasingly, there's also greater focus on the E part of it as well. And when I was in Beijing last week and talked to some industry participants, at an event, and there's been increasingly interest on ESG. And the E part is becoming quite important because of obviously all the pollution that we're seeing. So there's been increasing focus on the E part of the environmental part of it as well. And over the past year, we've also incorporated a new enhancement that is around sort of carbon risk and climate change and the carbon emissions as well. So really, in a first similar way to how we could come up with the sustainability rating, we also partnered with Sustainalytics to basically leverage on their company-level research and our portfolio holding data to come up with the carbon metrics of individual funds as well. So this allows really, about 30,000 funds globally to receive a carbon metric, and then they can help, investors to better understand, the carbon footprint that they have within their mutual fund portfolio. So this is the, in the bottom part of the slide, you can see the low carbon metrics. So basically for a fund that's have a carbon risk score to below 10, and also the fossil fuel exposure of less than 7%, they receive a low carbon designation. So there's something, a label, it's not a rating, but it's a label that we apply to funds who meet those criteria. And very similar again to how we come up with the sustainability rating, we assign, that the portfolio we need to have 67% of the portfolio holding for us to derive a carbon risk rating on that as well. But again, that the label there is kind of the destination of the label that we put on funds who meet the criteria I just mentioned. So here are the two things that, primarily on the sustainability rating and also on the carbon metric that we've been rolling out in the market, the sustainability rating since 2016, and more recently the enhancement and also the carbon metric from May 2018 as well. So these are all things that we are doing, but that is not the end of our research or our endeavors into ESG. In the ESG arena, there's a long pipeline of roadmap developments that's still to come. I mentioned about earlier on in the beginning of my presentation that at the moment, if you look at a global sovereign bond fund, we are unable to populate ESG rating on those funds. It's something that's sort of coming up in the sustainability rating 2.0. If you look at the bottom part of the slide, we are trying to incorporate corporate risk rating and expand our fixed income coverage for sovereign bonds as well. So that can, for investors who are focused on the sovereign bond side, they can also get ESG rating on those as well. But certainly, I think aligned with in other areas, we are also increasing the accessibility and ease for investors to access this rating, and certainly to satisfy the demand that investors have in this space. So this is my presentation for today, and certainly if there are further questions, I think we have a panel session later on this afternoon, and certainly welcome your questions on that front as well. So thank you very much for your attention this afternoon. Thank you.
Thank you.